Henry Ford, founder of Ford Motor, said, "It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning." Although several decades have passed, this remark by Mr. Ford appears to be as accurate now as it has been in the 1930s. This is not to imply that the concept of banking is a bad thing. Banks provide us with extremely important services and have become a necessity today. We all want to keep our money somewhere safe and secure, and banks supposedly provide that safe haven for our money. After all, you probably don't want to just keep your money under your bed, and you certainly don't want to dig a hole in your backyard just to hide your money. However, in reality, banks does not keep your money, but they frequently make large profits out of it. Unfortunately, because financial organizations function in complicated and stringent systems, certain unusual practices are hidden from the public's inquisitive eyes. It doesn't matter which side of the coin you choose. We're all in this together, one way or another. Whether you're taking out a loan, spending your money, or saving it, the banks generate money in a variety of ways. The sad part is that you are unaware that you are being squeezed dry. Also, bank stocks have become an investor's delight because of having multiple revenue streams. In today's video, I will show you the 7 truths the bank won't tell you about money. Welcome to Thrive Tastic. If you're new here, why not hit that subscribe button and join our community? And as always guys, give this video a thumbs up for that YouTube algorithm. Number 1. Every year, you lose money. You've probably heard that the bank is the finest place to put your money. But nobody has informed you that keeping it in the bank would make you lose your money instead. This isn't due to the fees you pay on your purchases or someone stealing your money. This is because of inflation. Inflation is the general increase in prices and the fall in the purchasing value of money over some time. What this implies is that an item purchased today with a 50 note will cost slightly higher in a year and a significantly more in 10 years. If you believe the money you have in your account is secure, you would assume the value of your money to remain constant or perhaps increase over time due to interest. Every investor wants to keep up with inflation, but this isn't always possible with most bank accounts. For example, on average, the inflation in the United States is 2%, and your money in the bank returns 0.05 interest. You're losing up to 1.95% of your money every year. I'm not referring to the money you invested into some financial platforms in the hopes of making a profit. Rather, I'm referring to the money you have sitting idle in your savings or checking account right now. Number 2. Banks profit from your credit and debit card transactions. First, banks generate money by charging processing fees every time you swipe your credit or debit card and make a transaction. You may not realize it because you were just charged for your actual purchase, but the merchant is responsible for the processing costs. The merchant might have already included these costs in the sale price in order for the merchant to avoid incurring losses. Let's say you spent $500 on an item and paid with your credit card. If the merchant pays 3% on every payment made with a credit or debit card, that's a staggering $15 that go to the bank. Do you think the merchant would be happy to have $15 deducted from his earnings if the bank gets his money only for supplying the machines and the convenience of payment? In reality, you're the one shouldering this cost. Let's say the item was supposed to sell for $380, and the business owner decides to raise the price to $400. The extra $20 will cover the 3% charge that would go to the bank for card transactions, assuming that most customers would prefer to pay with their cards. Second, because the banks get so much money off your credit card, it's no surprise that banks offer so many incentives only to get you to sign up for one. What you probably don't realize is that the interest rates on your credit card can be raised at any time. The average interest rate on a credit card is 17%, but your bank can decide to raise it to 18% or 19% after giving you 15 to 30 days notice. Because you often don't get to read these letters, which often contain lengthy legal jargon, the banks get away with it while profiting from your ignorance. Now, if you have compound credit card interest, it will simply continue to accumulate, which will eventually work against you if you do not pay off these debts. If you do not pay off these credit card debts, you may find yourself in a terrible financial situation. I'm not implying that the concept of a credit card is bad in and of itself. It's a useful service that offers convenience for most of us, and it's become a part of our daily lives. However, caution should be exercised in order to avoid accumulating debts, as this can be a dangerous place to be in. Make sure to pay off your debts every month. Number 3. The money you put in the bank is not tangible. As I have said at the beginning of this video, the bank does not only keep your money, they profit from it. You could have a lot of money in the bank, but it's just numbers and electronic records because banks use your money to do business. They offer this money to others in the form of business loans, car loans, or mortgages. You might think that your money is in the bank, but is actually in other places creating more money for the bank. This fact manifested itself in 2008 during the Great Recession when panicked customers flocked to the banks to take their money, but the banks lacked sufficient funds to pay everyone. The banks could have the amount in liquidity, but in the event of a crisis, when everybody is scrambling for cash, the actual money might not be available. However, how can banks do this? This is due to a policy known as fractional reserve banking, which allows your bank to lend out your money in the form of loans and mortgages to people in need. Does this imply that banks are not a secure place to store your funds? Of course not. Your money is secured by insurance, and the government is ready to intervene if something goes wrong. So if you have money in the bank, you can sleep soundly with your eyes closed. Only keep in mind that placing money in the bank is not the same as putting money in a box that you can access at any time. Your money is busy making money, although not for you, but for your bank. You may access your money whenever you want as an individual. But if everyone wants it at the same time, there is a possibility that only a few, or at worst no one, would get it. Before we go on to the next item, I'd like to ask you guys, where do you usually keep your money? Are you also keeping most of them in the bank? Or are you the type who invests in stocks and other properties? After learning about these truths about banks, what are your thoughts? Let us know your answers in the comment section below, since your opinion really matters. Number 4. Bankers are not your friends. Certainly, you used to think they were your friends since they know your name, contact you frequently, speak with you, show you love and adoration. They even remember your birthdays and celebrate your anniversaries. And that's it. You're hooked. The fact is that these people don't love you. They're just acting out a well-rehearsed script, waiting for the ideal moment to strike. My banker acquaintance told me how he can become a customer's friend by doing all of the things I said before while earning their trust. He makes them feel like he's on their side and not the bank's, and then talks them into accepting a loan they didn't even intend on getting. Imagine taking out a $50,000 line of credit you hadn't planned on. But that's exactly what happens when you form a friendship with a banker. They just worry about the numbers. They are given targets by their managers and supervisors, and if they do not reach these targets in a timely manner, they are fired. My friend also told me how some of his coworkers were fired because they attempted to be genuine because they cared about their clients and exhibited true compassion. As a result, they were unable to meet their targets. When the management found out, they were shown the exit door. So be on guard when your banker friend shows up next year with a big smile and talks about his company's latest deals. So you better think it through. Before you sign up for any loan, Make absolutely sure it's what you need and want to do. Never allow yourself to be emotionally coerced by any of those phony friendships. Number 5. Foreign transaction fees. Foreign transaction fees are another method at which most banks profit from their clients. Did you know that when you go outside of the United States and use your credit or debit card to make transactions, you will incur extra fees? However, your issuing bank will not tell you this unless you inquire. Some time ago, when a friend returned from a trip that lasted 15 days outside of the United States, he was surprised to see a total of $105 in international transaction fees on his bank statement. Most banks won't tell you all of this because if they did, they know you'd ditch them and look for alternative money options. Some banks have credit card programs that have coverage in some countries outside US. When you go to these countries and use their credit card services, you won't incur additional charges. Unfortunately, my friend was unaware of this and was not part of such a program. As a result, he was charged with something he could have avoided. Number 6. Frequently check your accounts. Because your bank account is such an important aspect of your life, don't be too busy or lazy to check it on a frequent basis. There might be some charges on your record that you are unaware of. If you report a charge that isn't yours within a 90-day window, your bank is required by law to refund the money to your account within 48 hours. That is why it is important to always check your bank transactions. Your bank does not want you to know this, and they may try to delay or avoid the process. But you can stand firm since you are legally protected, and they are obligated to credit your money back to your account. Before we go to the last item on 7 truths the banks won't tell you about money, I'd like to ask you guys if you also have similar experience traveling outside your country and using your cards, then suddenly you have been charged a significant amount of money for foreign transactions. Please tell us your story in the comment section down below. Number 7. You're being watched. Banks keep track of all your financial transactions, and they are compelled by law to report any questionable financial activity to the Internal Revenue Service, or the IRS. This regulation was implemented to prevent shady transactions such as money laundering. Any depositor withdrawal in excess of $10,000 is reported to the IRS. If your account needs to be audited, the IRS will issue queries requiring an explanation for certain activities. First, officials want to know if you pay taxes on the funds, and second, they want to know if the transactions were lawful. Some time ago, my friend applied for a study visa abroad. This usually requires the applicants to show bank certificate as a proof of financial capacity. However, she did not have enough funds, so she borrowed from a relative. After acquiring the bank certificate, she returned the funds all at once. A few days later, she received a phone call from the bank asking about her job, her parents' job, and why she had such a significant amount of money transferred. She just answered genuinely, and the bank let her off. This example is a solid proof that we are all being watched. That's it for the video, guys. I'm sure that this knowledge will help you in staying clean and out of trouble. Thank you for watching this Thrive-tastic video. So if you found it valuable, consider subscribing to our channel and joining our awesome community. And if you're still hungry for more, we handpicked this awesome Thrive-tastic video for you to watch next.